On Thursday, the US dollar index slipped after the publication of US inflation data. In February, the consumer price index rose by 1.7% in annual terms and by 0.4% on a monthly basis. Investors realized that the expectations of rapid economic growth were unjustified, so demand for the US dollar weakened immediately. As a result, the US dollar index hit a weekly low. The US dollar index fell to a weekly low due to the disappointing inflation data. Besides, the US House of Representatives has finally approved one of the largest economic stimulus bills in US history. It means that a $1.9 trillion relief package will be soon sent to President Biden to be signed into law. What's more, the 10-year US Treasury yield dropped by about 0.1% from last week's high. All this news is bearish for the US currency. However, the US dollar index is unlikely to resume a downward movement following the string of disappointing news. The yen was flat yesterday, even despite a brisk growth in the S&P 500 and Nikkei 225 indexes. On Thursday morning, they grew by 0.6% and 0.275 respectively. Apparently, the yen remains flat ahead of the ECB meeting. Overall, it's likely to weaken amid the strengthening of the US dollar across the board. The dollar-yen pair is expected to break above the 109.17 level. If so, the next target will be the level of 110.30. This is also confirmed by technical indicators, which today signal further growth. On Wednesday, the Australian dollar added 22 pips. However, judging by the technical indicators, the quote is unlikely to rise higher. Moreover, today, the ECB meeting will take place. Economists believe that its results will drag the main currencies down. The nearest target of the AUD USD pair will be the level of 0.7615, followed by a correctional and a retreat to the low of December 2017. And that's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.